Thank you for joining iMeet. When you hear the tone, you will be the 21st person to join the meeting. The meeting is now being recorded.
Hey everybody, good afternoon. This is David Blake with Tuesday Tech Talk. And today we're going to quickly review some of the last few days, and we're going to take a look at what sectors may be outperforming. This is your first time joining us. We're going to talk about 20-25 minutes. Usually goes a little bit longer than that. And then you'll have some time afterwards to ask us some questions about what we talked about, or perhaps some individual stocks, or anything you want to talk about with the market. What we want to talk about today is we're sort of running out of gas with this Trump trade. If you read the market letter last week, we talked about some of the sectors that are underperforming over the last week and the last month. Not surprisingly, most of those were the best performers last fall. That includes the financial sector, which was down just last week. We were down 3% of the financials. Materials, they were down 2.5%. Energy was down 1.87%. Industrials were off 1.58%, and technology also was off about 1.36%. Most of that in the technology sector was due to selling the semiconductors, which was one of the best trades since the election, and now it's kind of rolling over. We'll take a look at some of those charts too. A lot of stuff going on out there that's bothering the market, mostly geopolitical risks. We kind of kicked off into earnings season yesterday. If you read the daily market commentary, we talked about it was a good solid start to earnings season. However, it was also the lowest volume day of the whole year. And in addition to that, the Dow Jones and S&P 500 ran into resistance at their respective 50-day moving average, and the Russell 2000 came up short of its 100-day moving average. And we talked that was, although it looked good, because you didn't have any the volume to confirm the move, it most likely was an overbought or oversold bounce and remained suspect. That's pretty much what we have today. We've almost given back the whole rally from yesterday, in fact, as of this afternoon. And the worst performers, again, are transportation index. Russell 2000 is holding up okay. But anyway, those sectors that we have over there are the ones that, again, were the best performers coming off of the election. What we're seeing happening here now, we've seen over the last week, we saw the 10-year Treasury, which actually hit about 2.61% at the last FOMC meeting. That has fallen all the way back to, I believe, this morning it's at we're at 2.18, which is where it was back in 2015. So we've basically given up all the gains that the Treasury has made. You know, we're seeing a flight to safety also due to geopolitical concerns, and you're also seeing just the perceived slowing in the economy, basically because people see that the Trump trade may be stalled. The tax cuts and all the pro-growth policies that were on the table seem to be being pushed off to the side while we look at North Korea and Syria and some of these things. Now that can have, of course, it's going to be hard for the market to go up when all this is going on. But there are some things that are actually still in a bull market that I think you can probably put some money into, and we can still go forward. Now our momentum index is at a neutral +2, sentiments at a neutral 0. The CTI remains bullish. It's +13. We haven't been doing real well with that this year, but hopefully we'll see it come back and back in track here later on as the year goes on. Internal breadth this last week was also mixed. Although we saw the NYSE advanced decline line, which is normally a leading indicator for the market direction, that actually made some new highs last week. The NASDAQ did not make new highs in its advanced decline line, but now we're kind of rolling over. And also, we're not having a expansion in the new 52-week lows, new lows, and new highs. And in fact, as of the close yesterday, despite that big run, the number of stocks that are trading within 1% of a new high, it was up around 30% mid-February. It's down now to about 9%. So that's a big fall off, which means you're having less and less stocks that are punching out new highs while we're going sideways, and that's kind of a bearish pattern. So anyway, last week what we did, we did see some sectors that outperformed. What I want to try to do today is kind of sort of filter through some of the noise that we saw last week. We saw a lot of intraday swings, triple digits in some cases, end up flat until last Thursday. So if you're, one of the things we talked about last week and showed you a couple examples of some things to buy were the REITs, the real estate investment trusts. That sector has outperformed, and also the other defensive sectors, utilities and consumer staples, were also led. So what we'll do is we're going to take a look at the different sectors here after we look at the indexes and just see what's breaking out and what's breaking down, and some inflection points that you may want to look at with these different sectors as we move forward. Okay, here's the Dow Jones. As you can see, this short-term trend line. Let me get my pointer here. Right after the thing started, we're going up here. We've bounced off of this a couple times, and we finally broke below the 50-day moving average last week, and we're not able to recapture that yet. So that's a problem. That's going to bring into play probably the 100-day moving average, which would be around 20,205. Technical indicators down here are bearish, but they're not falling apart. I mean, you're kind of starting to go. The market's still in a very tight range bound on the Dow. We're getting down here to the oversold area. Today may push us back down there. The numbers that you want to watch on the Dow is 20,412. That's the low from a few weeks ago. If we take that out, you have a good chance of coming down here to this 20,200, which is the 100-day, and then possibly even this 20,000, which would be basically a 38.2% retracement level on the Fibonacci levels. That's where, if you go back, this is called polarity in the market. When an old resistance level now becomes support, that would also bring into this 20,000 area, and where we kept coming up here, bouncing off of that, broke out, came back to it. That's going to represent a pretty solid support level for us. I think if we would break this area, this 20,412, that we could, you could start to pick this up, because the economy is still showing signs of improving, and earnings are coming in better. So I think that would be probably the best area to kind of see it. Now, if we start to break out above this 50 again, maybe you can add a little bit to some positions that you're looking at. But I would still remain cautious in here and not be a hero and try to jump inside. Now here's a weekly chart on the Dow Jones. As you can see, the long-term trend still remains up. We have a kind of a pennant formation coming in here. Unfortunately, I kind of think this is going to break to the downside of that. Now, this is a 21-day and 34-day exponential moving average, which I like on weekly charts. Again, this comes down to around 20,178 would be the 21-day EMA. Again, that's kind of where the other ones are. And here's this 20,000 area where you can see what bounced off there 1, 2, 3, 4, 5, 7 or 8 weeks. And that's probably where I think we'll come down to. That's where we'll find support. But on the weekly, the indicators are still fine. Now, if you pull this up and you do see a break above, say, 20,750 on some good volume, then maybe we dodged a bullet, and the earnings are going to go ahead and allow the market to outperform. I just have my doubts, because especially like you see today with the financials and all, they're kind of selling the news, and when you do get the bounces, it's on low volume. So that's a little bit troublesome. Now here you see from last week where the AD line made a new high. One of the things that does have me a little bit concerned about this is when you start seeing the yields. We talked about this back in here when you were making new highs on the advanced decline line. A lot of that was due to last year actually, where you had a lot of the move in the advanced decline line was due to high yielding stock. So they weren't looking for growth; it was looking for safety. But you had operating companies, which we'll put a chart up later on. That wasn't making a new high, so it was the dancing AD line was mainly due to dividend paying stocks. But again, this isn't supporting that we're gonna fall apart. And believe me, I think that 10-year Treasury yield at around 2%, 2.125% area can probably keep a floor on this market going forward. I still don't see a 10, 12, 15% pullback in this market. I think we can catch ourselves and maybe get 5, 6, 7%. But that's going to be about it. Here's the Nasdaq. Again, we're trading sideways since February in a really narrow range. Struggling to hold on to this 50-day. Today we're at right now at 58.30. That puts us we're back below that 50-day on the Nasdaq. So we want to kind of watch that. Also keeps us below the pivot point, and you're starting to see the 14-day RSI at right now we're trading right around 40. We are a little bit oversold on this. We're not oversold on it. I take that back on the stochastics. So we still have some downside that we can look at. It would have to get down here around just below 5,600 to get that 38.2 Fibonacci retracement. I don't think you're going to see that because you have a longer term. This is going back a year. A longer term trend line seems to come in here, it's kind of following the 100-day moving average. That's around maybe around 5,700, 57, 56.90, something like that. That would be a worst case scenario where you see with the NASDAQ. Now, one of the things that's holding this thing up, I just talked a little bit ago. Well, this is the weekly NASDAQ chart. Again, you can see a pretty well-defined weekly trend. It's following that 34-week EMA up along that. But the 21-day comes in also around 5,600. You're still a very tight range. If you break below this from 1, 2, 3, 4, 5. Break below this low over here, that's probably going to bring you down to test this moving trend line. But the indicators, again, they're not indicative of a market that's fallen out of bed. This is just kind of looking at, it's probably sideways to a little bit of a pullback. Maybe if you get down here to around 56 something, that's not a huge move. That would be a 3 to 5% pullback in the market, and that's fine with that. I have no problem with that. All right, now this is a little bit of a problem. This is the semiconductor, the Philadelphia Semiconductor Index. You can see we've bounced off this trend line for a while, and now we broke below it. Today we're kind of flat. We're down 1.5 at 970. So we want to kind of watch this. We have broken below the 50. The 100-day comes in at 848, and we're at 970. So you could get another 3 or 4% on the downside of this. The indicators are oversold on the stochastics and the CCI, but these look like you may struggle for a little bit to be. You do have this kind of little triangle wedge thing coming in here, which are trying to hold that long-term trend line. The 100-day moving average on this thing comes in around 850. That's about another 50, 60 points lower in the SOX. This is what I think is going to hold the market up a little bit. If we can see this thing bounce back up above the 50, that could give the technology some more strength to break out to new highs. But again, the longer we go sideways and just kind of dwindle off here, I still think you probably end up with this 3 to 5% pullback, which it isn't that troublesome. Now here's on the longer term. This also you want to kind of watch. This thing here on the weekly chart shows you a longer term trend line coming up on semiconductors. You're bouncing off of that thing right in here at 970 where we are. So if you get down here around 960, 950, you're breaking that longer term trend line, which is troublesome. And that could bring you back down here around this 850 also. So that's if the semiconductors can't bounce off of this, that'll probably bring the whole technology sector down a little bit lower. All right, so what is working with this Trump trade? We talked about this a little bit last week as a group that was just upgraded and starting to break out. This is the REITs, the Real Estate Investment Trust. XLRE is the symbol on this thing. As you can see, you have a nice trend line coming up. It's a defensive sector. It's underperformed for quite a while, but you're seeing some nice action in real estate. So a new one we have that came up today. I'm gonna actually want to show you a couple of REITs that I think you could move into. Besides the real estate market, it seems to be improving. Most of these pay a decent dividend, anywhere from about 2.5% to 3% up to as much as 5, 6, 7%. So I'd probably steer away from the ones that are paying 6 and 7%. But if you want a 3.5 or 4% in an area or sector of the market that's growing, you can take a look at these. The technical indicators look good. They're breaking out the new highs, confirming this move. One that came up this week or last week, yesterday I think it came up. This is a ProShares Ultra Real Estate REIT. This I think is a leveraged double move. You're going to start to break out to new highs in here. You bounced off of this long-term trend line. You're having a couple nice days moving up again, breaking out to new highs. The symbol on this is URE. I don't have the what the yield is on that, but I say most of these are trading at 3 or 4%. We talked about this one last week. I brought up 3 or 4 of them. This is East Group Properties, EGP. As you can see, after we had our meeting last week over here, we bounced off this upper trend line, and we kind of broke out to new highs in this thing. Then you made another new high yesterday while the market was rallying. Here we have the indicators are confirming what we have. We have some positive divergence going on in this thing, which means this thing should probably work higher. Another one I like in here is Universal Health Realty Income Trust. The symbol on this is UHT, and we broke out to a new high here last week. Again, we bounced off of that. That was one we looked at last week also, and we got this nice bounce and breaking out to new highs on that. That move is also confirmed by the indicators moving higher. I think that would be one that we can look at. Okay, this one came up, I believe, yesterday or today as a breakout. You have this nice little triangle coming in, or pennant formation. We had a breakout above that, and we're moving higher on that today, confirmed with volume, nice good volume going up there. And technical indicators are also very positive. This would be another one I think you can go into. Another one would be, well, there's several I can give you, but that's 4 that I think that you could buy in here on the REITs and just hold while, especially while you're keeping more of a defensive hold on this market until some of these geopolitical risks come by. And quite frankly, the Trump agenda looks like it could be August or September before they really start to make much headway on the taxes or even the tax cuts or some of these, cutting back some of the policies that should infrastructure spending and all. Okay, another sector I want you to take a look at, and this is consumer staples. This is your cigarettes, your beer, your toilet paper, your everyday items. They also pay a good dividend with the 10-year yield back down here below 2.25. These become attractive again. You broke out to a new high yesterday, ran into resistance around 56. Today we are, it's actually higher again today. We're up another 24 cents, 50 up in here, this area. So again, another place that looks confirmed by some of the indicators making new highs. A little bit of slowing momentum, but not too bad. Stocks in this group include things like CL, Colgate-Palmolive. You can look at Unilever, UN, Kimberly-Clark, KMB. Those are just a couple ideas in this sector that look really good. Now here's the consumer staples on the point and figure chart, and you can see here it was broken above a double top breakout in this thing. So you still have plenty of upside move in this thing. You can also draw trend lines, down here on the bottom of these charts. So you have support down here around 50, 51, 52 if the market would absolutely just fall out of bed. But go with the point and figure charts. When they break out of these patterns, they usually tend to move higher. So that would be one that I would you could pick up to be while you're defensive in here. Okay, another one that we talked a little bit about, this is the utility sectors, XLU. It's outperforming now. It was one of the top 3 sectors last week. Kind of moving on this. I don't see a lot of big upside, but you know, the utilities look good. If you're looking for ideas in utility, and the reason this thing could outperform is as long as the rates stay down here at you know, 2 1/8, 2 1/4 area, you're not going to get much downside on that. That's going to help support these levels. If you go into the market site, Market Edge site, we go into advanced tools and look at industry group analysis. I apologize when I do the screen captures that you can't read these things, but this would give you some ideas where that you could find some stocks that are outperforming in the electric utilities, and I also like the water utilities. So this is Black Hills, this is Dominican Resources, El Paso, PG&F, Excel Energy. These are all should outperform the market going forward. They're all rated long, score 0, and I think you can find some nice upside to these in these areas. Water utilities. Here's how water utilities have outperformed the S&P. While it's going down, this thing's moving straight up. Some ideas in here are CWSO, Cons Water, Aqua America, WTR, California Water Services, American Water Works. I like water utilities. I think probably one day we'll have a war fought over who has the clean water. So this will give you some ideas in a sector that's outperforming. All right. Now for the downside. You know, part of the Trump trade, you're already seeing the delay in what he wants to do showing up in different sectors that were actually some of the leading groups over here. Now here's the financials. What's important about this today is we're coming in with better earnings. We're down about 8% since the market peaked over here March 1st, and which is after some nice earnings coming out here with J.P. Morgan. Today you had Bank of America. Goldman Sachs missed today, which is really knocking the Dow down a little bit. What they're doing, the traders are selling the news on these earnings. One of the reasons for that is because you're getting a lower yield. The spreads are actually tighter now than they were over in this area. That means that the 10-year yield has come down, and the 30-year yield, that's where the banks make their money. So they're going to have tighter yields. That's going to probably cut into their earnings a little bit going forward. So I'm not sure. You know, what I think longer term, the upside will be there as long as the economy is well, but this thing's getting oversold. You want to make sure that we don't, you know, break below about 23 on the financials. Right now we're 2303, 2305. If we do, that'll turn this point and figure chart of the financial group into a row of zeros coming down. And that could open up the door for another maybe 7 or 8% lower on the financial sector. So I'm not a buyer of those. They are oversold, but I do think you'll get a better entry price as they sell the news on the banks, because I think if the yields stay this low in the 10-year, or at least below 2 1/4, you'll see them rein in their earnings projections going forward. Okay, everyone's excited about the infrastructure. We're going to spend $1 trillion building out roads and bridges like that. Well, here we've gone sideways in this thing since basically since January. I think right over here they were talking about we're going to spend $1 trillion infrastructure. Well, that's when are we going to do it? And we broke below the 50-day moving average. We've bounced 3 times now off of the 100-day moving average. Today we're at 51.48, down another 0.5%. So you're bouncing on this thing again. A break of that would be negative, and of course the indicators are they're not oversold yet, meaning you might get a little bit more downside. But I like this sector longer term. As long as we hold this area, and maybe you get if the market rolls over down here on the support 2 area right around at $50, which is about 4% lower. That would be a place we could probably buy some of these stocks, and we'll talk about that later on. I just don't see I'm not anxious to buy anything right now, especially while it plays with this and the way the overall market is going. But they are getting oversold, and maybe if things pick up and we stay range bound, you can buy here and kind of sell out in this range bound market that we've been in. Another one is having a little bit of trouble is industrials. We had a nice run in these. Again, we're making lower lows, lower highs. We'll see if this thing comes down here. It's also coming into play on this trend line, but also the 100-day is coming into play on this thing too. You're below the 50 again, and that also is going to represent a pretty good resistance on the downside. So I would wait. Now, what is helping the industrials is the dollar has weakened a little bit, and that of course helps the multinationals. The lower dollar will help their won't cut into their revenues. But on this thing here, you want to watch that trend line around the 100-day moving average. If that breaks, again, that's going to cause trouble. And right now, we're right on that trend line again where we were a couple of days ago. This is a real battle here to see if we can hold that. Again, and the 30-day stochastics is only at around 36, so this still has room to work lower before it's completely oversold. Now here's the technology we wanted to look at again before. We're battling to hold on to this 50-day moving average. We broke below it briefly a couple of days ago. I think it was on Thursday, but we bounced right back up. That's a positive. Pivot point of this thing is 53.10. The technology sector is holding up okay again today. We're still below that pivot point, but you look like you're trying to find a bottom on some of these indicators. They've kind of bottomed and bounced off of this. That would be good, but we're going to need the semiconductors to bounce off of this level, hold that 100-day moving average. If it does, then the technology sector could become a leader on that. I don't want to be a hero on this thing yet because from what I see, you have a limited number of stocks right now, like Facebook and Amazon. Some of those that are just keeping this thing above, outperforming at this stage. But again, you're in a series here where you had a high here, a low, a lower high, another lower low. So we want to see if this thing can hold this 100-day moving average and see what happens with that. So if the semis have another, if you watch the stocks and you see another 1% to 1.5% move down, that's probably going to be a sign that the technology sector will be rolling over. Okay, over here we have the next one with the energy sector. Now, right over here, we're talking about the Syria bombing stuff. We bounced up here. The oil got to about $53 and has struggled to hold that area. In fact, we're down here now to 52.25. Except for bounces, I'm still not a big fan of the of energy. You're still not oversold on this thing. You need to come back down here, or maybe you come down and at least test that $50 level on crude oil prices. If crude oil can hold 51 or $50, maybe you get some more sideways action. But if it does break $50 a barrel, I still think that the downside on oil could be as low as 45 to maybe $47 a barrel, somewhere in that. So I would only play this thing for bounces. And in that case, you're kind of a doomsday. You're kind of hoping that we're going to bomb somebody else and get a bounce in crude oil prices. But I just think there's too much oversupply on that. All right, one or two more charts to look at real quickly here. If you are still troubled with what's going on in Korea in there, rather than just buy puts because of the lower the low yields, you may not get a 10% swing in the market where it's going lower. But one of the ways you can fire against this would be with gold. Gold's off. It's struggled here the last 2 or 3 days, but it does look to me like we could probably get up. This isn't the actual gold per ounce, but I think we could probably get it. It's trading right now about $12.90. I think gold has an upside target of about $13.50, which would provide you some downside, leverage for you if you think the market's going to roll over and all this geopolitical risk is something that you want to track. So one last chart before I open this up to some questions. I see where they're starting to build up here. We talked about, here's gold also over here on this DGL, which is an ETF gold fund. We're on our way up here. This move from about 40 went up to about 44, would be another 3 points. That'd be about a 6 or 7% move. I think that would be your target on this thing in here, 41 to about 45. If it breaks above that, you can get a trade up to 47. But I'm watching, 1350 is my target on that. Okay, last chart on an investment idea. This is called WP as in Paul, S as in Sam. It's an ETF, and it's a REIT of international developed property trusts. So if you're looking to, you want to go overseas and you're still worried that the European markets and some of the emerging markets might pull back, this would be another way that you could play the real estate boom that's going on over there and make a decent yield. This looks higher to me also. You're got a little bit of a overbought over here, breaking out of this channel. But if you can pull back down here a little bit, I think this would represent something with a good yield that you could buy. Okay, I'm going to open it up real quick to a couple questions and share the screen here. A lot of questions about audio. Okay, well they're off right now. So anyway, if we're going to open it up to questions in here. If you have some questions about the different sectors or some different stocks, we'll take that. We have about another 5-10 minutes to go. I'm not seeing anybody typing at this point. Okay, well, somebody just came up. There's a couple more. Okay, I'm still very cautious on this, on the market, with the geopolitical risks, but I do think our downside is projected. We plan to have portfolios on the new website. Portfolios won't be out until, it looks like now, until the end of the summer, but we can actually talk about the portfolios, and what I think we can do is we'll actually start putting a few of them up on Tuesday that we can start to look at what holdings we have, maybe look and help you build your own portfolios. Okay, we have a couple questions now about some stocks, so I'm going to go ahead and try to share this with you. And someone says last week, you said, "What will have any problems less bombs fall? Do I have a line in the White House?" I might. I had a call last night on my phone messenger. It was actually from Donald Trump saying something. So, okay, what we want to do here, we'll look at a couple of these stock ideas you've asked about. First one is RVI. RVI, are you sure that's the symbol? I'm not showing anything. So maybe I copied it wrong. Okay, what do I think of SDOW, the Dow short? This looks okay to me, but my problem is I don't think we're gonna crack. You know what I mean? I just think that you're upside down. You might do a little bit on the SDOW. I'm more inclined to think that if we get overbought over in here, you can still go with the UDOW at some point. I think we'll get settled here after maybe some point where we can hold this 23, 24 area. I think that might be about it for the downside. I wouldn't do the leveraged downside yet at this stage. I still think you can. Watch this. I don't think it's going to be a big down pullback. Let me go back to the questions here. Okay. Let's see here. Oh, RYI. My bad. Okay, hold on. Okay, Ryerson Holding. I don't know anything about this, but what we're looking at, this bounce over here, low price stock, trades between 8.5 and 16. Boy, this isn't really telling me a lot on this thing. Your pivot point 1167. We're at 1230 now. Let me see if I can see what industry this is in. All right. Distributed metals, other materials. Well, okay, you're in the kind of metal fabricators. I think you're going to be range bound in this thing because it's a infrastructure stock, and the ones that I do follow have stalled. You can say I want to spend $1 trillion on building infrastructure, but until you start talking to Congress and trying to get the funds for these projects, I just don't see that these are going to break out to new highs anytime soon. You're struggling to hold on to some of these moving averages in here, but I think you're in the wrong sector at this stage. Now you come down here where you can find support down here around 10.5 or something like that. Some of these infrastructure stocks, if we start to pick up, they'll move again. Like over in here, here's November. When the infrastructure comes into play, boom, you go from 8.5 to 16, and now it's been a slow grind all the way down. Over in here is where they started talking about we're going to spend $1 trillion, and that's kind of fallen off to the wayside too. So you've seen this thing pull down. I don't think I'd play this. I would buy these stocks on pullbacks only, because if they do start talking about it, we can get that bounce. But you got a lot of work to do before you before you start to see a big move in these things. Okay, a couple more questions. HBI and CNBX. And again, I think we'll have our new website up here in about the next 2 weeks. We won't have a webinar next week, so I'll be in Orlando at the Raymond James conference. But I think that but 2 weeks later we will. Hanes brand makes underwear. Everybody's got to have underwear. Seeing some positive divergence in the 14-day RSI, also in the MACD. I would think you can play it. You're playing this on the resistance level at the 100-day moving average, and you're in the right sector. I think this thing at least goes up and tries to fill that gap up here on the 22.5. And if you can do that, you can probably work your way higher. This is one that's is oversold, and you might be you're not really overbought at this stage. I think Hanes could be a play for you. All right, CNBX. Cannabis Pharmaceuticals. Well, it's a $2 stock. I don't know. This tells me when you have something like this that you may have some support down here around the 100-day moving average. You're oversold. But on these things like this, I look at the accumulation distribution. On the smart charts, you have the 50-day UD slope. I tend to look at that, but this is telling me that investors are starting to they're getting tired of waiting, whatever this thing has coming down the line. Of course, this is cannabis. I guess this is probably in the pot industry. If you're playing the stocks that are going to that have the marijuana, medical marijuana or leisure marijuana. There's a big list that CARA someone was telling me about the other day. Some of these can work out well. There is a new ETF, which might be an easier way to play it, because some of these players, if there's too many of them, if you're in the wrong one, you're not going to make any money. I don't know the symbol for the ETF for the cannabis funds, but that might be a better way to play it. And then whichever ones become the big winners, they'll be involved in that. So it'll enable you to get that. Okay. You talk about how you keep all these triggers organized by if here is here. Is technical is there? Is it just because you're so familiar you know, or do you keep a chart of triggers to look for? I've been doing this for a long time. I've been doing this probably for about 25 years. And there are certain things I look for, but just besides what you're looking at on the charts, there's other things like where they sell the news. The fact that J.P. Morgan, Wells Fargo, Bank of America, they all come out and they beat their earnings and the stocks go down. What I mentioned earlier, you're selling the news. The yields are becoming smaller. I can foresee them saying, well, because of whether yields are down because of a slowing economy or for whatever reason, we may have to cut a couple pennies off of our earnings projections because of that, and that's where they make their money. So that's telling me that there's some problems in that. CWST. I've liked this stock for a while, and this is a good example where you're seeing the accumulation distribution up in here. Even while this is going sideways, stuck in this really narrow range, they're buying it. Okay, that's positive divergence to me. That looks good. You have a slowing down in momentum over here, but when you have something going sideways and it's still under accumulation, that's a positive. To me, that means that maybe they're waiting for earnings in here, but most of the majority of the investors or traders are looking for this thing to possibly beat. So this is okay. And I also like the waste materials industry too. That's performing fairly well too. So even though this is slowing down this sideways thing, this range, of course, when you're into something like this, if you're a real short-term trader, this thing pops down to 13.5. You maybe with on some good volume, maybe you want to get out of it. But if it can get above that 14.25, you have a nice pop in that. Let me look at one more thing before I get off of this chart, and that would be okay. You had a broken you had a double top breakout in this CWST the other day. That's also bullish too. So you need to get above. You get 14.51. That's adds another X to it, and you'll be actually taking out a high from way back here in multi-year high. So we can break above that. I think you're going higher. You're breaking out to an all-time high on that, and that's a bullish pattern. Okay. All right, that looks about it. I've gone way over the line. If you have some questions about some of these sectors and some stocks in these sectors that you may want to look at, just send an email to me at the doc@marketedge.com or support@marketedge.com, and I'll try to get to it. Again, there won't be a webinar next week. I'll be at the Raymond James conference, and we're going to be demoing the new website. And I think in 2 weeks, unless something crazy happens, we'll probably be doing a new demo of the new site there, try to walk you through some of the new modules and some of the new features that we have. I think you'll really like it. And we'll wrap it up. I really appreciate you taking the time out of your busy day to join me on this thing, and I hope you got something out of it. And have a good week.